Hey everybody, Chris Johnson here, Monday, September 14th. Glad to have you back after the weekend. Hope you had an enjoyable one. Hope you got out and had a little bit of fun. Did things that make you happy. I did some prep work, getting ready for the trading. Lots of curveballs thrown overnight. Somebody's already mentioned it. Oracle in, Microsoft out. TikTok still going to go on. Going to be ticking past Wednesday, I guess now. What do the Chinese have to do with that? Not that I care. It's great for Oracle, up 6% in pre-market trading. And this is after they had a great quarterly earnings report last week. Remember, I told you to wait to buy it, let it come back. Not the case any longer. I think you need to make it, if you want to put it in the portfolio, or if you don't have it in the portfolio, look for a slight pullback here. This is news that's going to make Oracle go for a little while here. This is a little more relevant. No wonder Microsoft, Walmart, everybody else. Good morning, everybody. Everybody else is looking to get this company, and Oracle comes away with it. I think that's very fascinating. What does it say about Oracle moving forward? We'll talk about that over the next couple of weeks, but we're going to look at the Oracle chart and a couple of others. Going to talk about the news overnight. Let's get right to the slides. Knock, knock. Hello to everybody. There he is, Big Cap, yelling at me again from way up north. Well, not so far up north, but up north. I'm guessing he's still up north. Morning, Bill. Flo, everybody else. All right. Strong Monday morning stock start. Try saying that 3 times fast. Strong Monday morning stock start. Strong Monday start for stocks. So last Friday, we talked about it. Even though we had some technical difficulties, we were able to get through the session. We talked about the fact that the NASDAQ needed to close higher. Futures were traded up on Friday, and it looked strong, looked like a good case. And then all of a sudden, you had all kinds of little things that happened over the last couple of days. I'm looking for the typo myself, but I'm sure I'll find it as I read it. Questions and charts. Anyhow, when we look at this, we had a similar open to the market on Friday. We were taking off, and then all of a sudden, Mitch McConnell comes out and says, well, we may not have a deal until after the election. Things start to fall. Very good. Very good. Nice attention to the details. I am not doing this for an easy subject. It really does matter on the confirmation day 1.3. We'll talk about that in a minute. Good job, Porter. You get the gold star for the day on finding the first typo. Anyhow, we saw everything from the TikTok news that came in and kind of dribbled into the news stream as rumors late in the afternoon trading, all the way to Mitch McConnell, and things just kind of spiraled lower from that. Market closed much lower. The S&P 500 was able to hold on to support, but the NASDAQ 100 was able to drop below its 50-day moving average. You know my rule. 2 days below that 50-day moving average, and it's time to get defensive. We had one, and you had to squint to see it last week. Now we're going to have one this week. We'll see what happens this morning. Whether or not we get the second in a row today, we're going to have to watch. And that's why this is going to be the most important thing you're going to watch, that confirmation day 1.3. I really am not doing this for easy subject. It does matter. Last week we did 1.0, 1.2. Now we're on 1.3. We're going to talk about this morning's upgrades and downgrades, some interesting ones, including a stock that is up on my on the stock that I gave you as a strike point stock, or a potential strike point stock on Friday. GameStop up 6% this morning. Another update for the dwindling game retailer and phone seller and yada yada. Anyhow, we're going to look at the upgrades and downgrades, and then finally your questions and charts. My favorite part of the point, because I get to listen to everybody not only give me their ideas, but we get to make fun of each other a little bit. So today's headlines and news: tech getting a bounce we need right out of the gate. We're seeing strong technology results after Oracle deal for TikTok goes through. Microsoft within 5 minutes. I got it on my phone. Microsoft out. 5 minutes later, TikTok in. Very interesting to see those headlines come across. Wonder what kind of stuff was going on between us and any envoys in China, et cetera, but it doesn't matter. Oracle's now the company. And that's really, I think, where the administration wanted this to lie, because Oracle is really a domestic company. When you look at them, a lot less business overseas in terms of servers and such, whereas Microsoft's obviously got servers that are doing their work all over the world. Oracle is a little more of the home company play. So not terribly surprised to see Oracle happen, but I think it's very interesting as to what they're going to do with it. Apple gets their target raised to 125 at Oppenheimer. You knew this was coming. Apple's been pulling back for a little while. Product day's coming up. They're going to have some sort of surprise, apparently, and the analysts are going to want to get ahead of that because typically their earnings report see sell-offs, their product days see rallies. So it's as simple as that. Verizon agreed to acquire TracFone. We had a lot of merger and acquisitions over the last 24, 48 hours here. They're doing a stock deal, cash and stock deal to bring in TracFone. TracFone, if you don't know, it's one of those phone sellers that is at the Kroger and Walmart and other stores. You can go in and pick up what some of the kids call a burner phone from TracFone. So Verizon's going to bring them under their umbrella, obviously put them under Verizon Services. Merck is going to acquire a $1 billion stake in Seattle Genetics, SGEN, which is trading up 9% as a result. That's because of some cancer studies that Seattle Genetics has gone through successfully so far. So they're trying to increase their portfolio. Love to see that from Merck. We're also seeing a large week of IPO offerings this week, especially in the tech sector, so something to watch out. That is usually a great catalyst for the market. And then Treasury Secretary this morning, Steve Mnuchin, interviewed. He said he's open to speaking with Senator Nancy Pelosi anytime regarding the stimulus. Obviously, this is becoming a situation. They want to get a stimulus package done. By they, I mean the administration. And the Democrats have kind of put their feet up on their desk and said, what are you going to give us here? Because they don't think they need that to happen before the election that is just a scant, I believe, 7 weeks away from now. And then NVIDIA buys ARMS, ARM. They buy them for $40 billion. What's that do for both companies, especially NVIDIA? It tells us that NVIDIA, who has always been organic, is now starting to put more of a focus on bringing in business through acquisitions. I like the move. When I look at NVIDIA stock, obviously you expect to see a stock trading higher or lower after an announcement like this because they're going to be using some capital. It's usually a great judge to see what the stock is doing right after the announcement. If it's trading lower, it's a natural M&A. They're trading 6% higher right now. So people like this move. And I think it's good fundamentally for NVIDIA, that golden child in the semiconductor sector. So let's get on to looking at the charts. And you notice I dropped the S&P 500. Not that it doesn't matter, but we're going to be talking cubes today because that is what matters. And that's part of what Confirmation Day is all about. Look at the cubes. We had a nice on that as well. We're not yet on the QQQ. Around 260. That's when we're going to be around a 30 RSI. That's when everybody's going to start to steam into the NASDAQ 100 again. But right now, it's important that we see a hold of this 50-day. If we don't, that study I talked about last week of a 12% move higher after this 10% decline starts to come off the table. So a close above 50-day moving average is number one thing you want to be watching at 359 today. The VIX closed lower despite the fact that the market closed lower on Friday. For those of us that watch the VIX, really watch the VIX, like calculating your own VIXs, like nerdy watching the VIX here. This is a good move. Whenever we see the VIX move counterintuitively, typically on days when we should be seeing support, and the VIX moved down on Friday when we should have seen a day of support, it's telling us that you have traders that are out there that are starting to bet on the fact that that support's going to hold. Honestly, folks, there's nothing against the investors. Love investors, love long-term investors. We talk about the difference between investing and trading here quite a bit because it's an important discernment to make when you're putting your dollars on the table or in the investment till here. So whenever I see a bounce or if I see technical support that's coming in, who is it that I want to see supporting it? It is the traders. It's not that I don't mind seeing the investors coming in on the 50-day moving average, but the traders are the ones that are going to drive that instant money, that fast money, that Q money, the money that is being driven by their computers. That's the money that's going to get the 50-day to hold support. And then everybody else comes in after they see, oh, the market's done with its little fit and it's going to go higher. Then the investors tend to come in and they trickle this thing higher. They melt it up FOMO starts to kick in. So I want to see some heavy volume today. If we see the NASDAQ 100 start to move back above that 50-day, it's going to tell us that the traders are getting involved, and that is the first group, and that's who the investors will follow. It is not the other way around. The traders are not going to follow the investors. So we're going to watch the VIX today. Watch for that to go down towards that 25. When it gets around 25, got to be frank, we're going to have to start getting a little more defensive about positions in the night trader portfolio and in the strike point portfolio. So watch that 25 level. I think it could take a couple days, 3, 4, for us to get some good closes right at or below that, but that's going to be your next mark. Confirmation day for the NASDAQ 100 version 1.3. I'm not bleeding this, guys. I'm really not. There's the same chart you just saw, a little more closer though. You've got the 50-day bouncing off of that, or the NASDAQ 100 bouncing off of that. This is last Friday. We closed down below it. Again, I want to see it taken out. I want to see us go up higher on good volume. Your confirmation wish list items. And last week, when Jerry, I believe it was, asked me, what do you want to see today, Chris? On Thursday, he asked me this. Somebody asked me. I'm not sure who it was. I said, I want to see the 50-day. I want to see the NASDAQ 100 close above the 20-day. It's got support from the 50-day already. I want to see it take out the 20-day rather. That did not happen. Right now, 20-day, just so you know, is right up around 508, right? So that's not going to happen today unless we get some huge monster rally. And that certainly it's in the cards a little bit here. We could see just an absolute run into the market. But at the same time, I'm not going to count on that. So I've lowered my expectations a little bit here today just so that I can get it. I want to see a NASDAQ 100. You can write this down, put it on a Post-it note on your computer. If you check things at the end of the day, I want to see the NASDAQ 100 above 278 at the end of the day. 278. And that's going to represent a couple closing values here over the last week or so. I started looking at my charts last night, started drawing lines, and that's the line, 278 or higher. I want to see QQQ volume 70 million or higher. I want to see the cube volume coming up being heavy. I don't want to see one of these mamby-pamby $25 million days where everybody's feeling the market out and kind of wanting to date it. I want to see people putting a ring on this bounce and actually letting it go higher here. So traders are going to put a ring on it by putting $70 million in volume into the cube. And then finally, I want to see the VIX close at 27 or below it. 27 or below. What does all that get us if it happens, this magic calculus that I put together? Well, gets us a month-end NASDAQ 100 that is starting to look to move back up towards that 300 level. 300 or higher. And at that point, that's that 12% move that I was talking about last week. At that point where we get this kickoff, you get an opportunity to do two things. Go a little longer on the market over the next couple of weeks, adding some alpha by adding some calls. And then there you go, Chicago. I just did it. I noticed that it was in front of that. So then you get that run up to 300, obviously. You can drop in some play on the cubes. You can actually use a TQQQ. You can use a number of things to get that, or you can use an option on it, short-term option. I'll talk about that, obviously, with my night trader and strike point traders people. But you're going to get enough room to the upside with a 12% move that you're going to be able to generate some alpha very quickly on individual companies. Fastly is one that pops out in mind today, up nicely because of the Oracle trade. Oracle is one that pops into mind, but you're going to get those opportunities, and I'll be there to show some of them to you. Earnings, headlines, and movers to trade. So this morning, going through the news, going through my headlines, going through my upgrades, going through my downgrades, and today is an upgrade, downgrade kind of day because earnings, quite frankly, are kind of petering out on us. So let's look at a few of them. This one hurts. This one really kind of hurts. Kroger downgraded to neutral from buy at Bank of America. Kroger was one of the companies that all the analysts started piling into when we saw the pandemic and how they were executing on the pandemic, really driving things higher. They were executing well, and they continue to do so. The problem is they now have much more inventory than they have demand. Much more inventory. Oh, hold on, Derry. I'm trying to read that. Give me a second, and I will go. I will hit that question here. So Kroger, they've got much more inventory. I was actually doing some reading over the weekend. Toilet paper now. They have it sitting around. They've gone and overbought. Not that the toilet paper is going to go bad or anything like that, but they're either number one, ready for the next round of the pandemic, which is when you're going to see the company start to do well, or number two, they're going to be sitting on some inventory for a while. When you sit on inventory, it costs you money because you can't rotate as quickly and move with the changes. And we're obviously in a change of season right now. Kroger gets the downgrade from Bank of America Securities, though. Stock's going to trade lower today. The other thing that you'll notice is 50-day is broken here. So whenever the 50-day gets broken and it starts to level out, I don't like it, especially on a stock that has been as low volatility as this. I'll take it on a higher volatility stock. I'll weather through some breaks below a 50-day on something that's a little more high volatility. In this particular case, though, like the fact that, we broke it from a bearish perspective, like the fact that we're breaking this and we're coming down right now. The 3150 is the natural mark that it looks like for me. That's about an 11% drop for Kroger right now. The downgrade is going to give you a little bit of fuel to get there. The stock's trading lower by almost 1% today. If you have it, this is a stock you want to step away from, let it kind of feel itself out to the downside, support at 31, maybe even $30. If you don't have it and you want to short it, something where you look at the January options or maybe even something a little closer right now. I think a November, December option on the put side in the 33 strikes, somewhere around there. You pick it. Is going to get you the money, the easy money on Kroger. Costco also, when you look at Costco, and I don't have the chart here for that, but we can pull it up when we're doing charts. If you look at Costco, they're undergoing a similar pullback right now. So a lot of the retail sector, which has been overextended. When you look at that XRT, the XRT has put in a stellar performance and is now getting ready to test its 50-day. It's testing time for a lot of these retail companies, and especially since we're heading into that Labor Day to Black Friday season where we're not going to get the normal trade that we see that just pops the XRT through the roof. MGM, down 1.2%, downgraded from neutral at Goldman Sachs. What's the reason and rationale behind this? Well, first of all, we're seeing a lot of news about the pandemic starting to make a second round, starting to make a comeback here. You've got right now in this case, and you'll notice the 20-day, the traders trend line is right there with MGM today. It's going to break below it, but you've also got, look at that, the 200-day moving average, which is in a declining pattern. That's bearish for the stock. 50 days been trading higher, trying to come up. You can see how this is going to play out. You're going to get a test at 21. That's immediately going to go down to a test at 19. Boom, boom, boom. This is a stock trade that you can look at from a mile mark perspective. 21 to 19, 19 consolidation holds. Doesn't hold, you're shooting down to a 16 print. Those are all levels you can make money on an options trade. At that point, you're watching the RSI. This will be something that'll pop up on the strike point list here pretty shortly as soon as that 50-day starts to level out and roll over. But MGM right now, if you had it in your portfolio, and the reason, obviously, the rationale is not only the pandemic, but you've got the airline companies coming out over the last couple of days telling us how much they're going to be cutting in terms of service, how much they're going to be looking for from the government. The airlines are not in a great shape right now. And as I've pointed out before, MGM and everybody else that's out in that beautiful little land in the desert has to get the people there somehow. And if they're not flying, if people aren't flying, they're not going to be sitting in front of the slot machines, regardless of what kind of incentives you put in front of them. So watch MGM right now for a print that takes it down to 19 before it finds some support. And I'm going to follow up on Chewy because they beat last week. They gave a good number. And I said, watch out because Chewy usually sees it sell off after the close. And you had a little bit of a tailwind from the market pushing it lower. Chewy did exactly that. And if you look at the test that I'm talking about for the NASDAQ 100, the same test is in place right now for Chewy. You've got Chewy that pulled back in July, tested 4 or 5 days here, and you saw multiple closes below the 50-day. Run right higher again, right? Another test here in May. Runs higher again. So you get a 20% run here. You get, in this particular case, you get about a 23 or 24% run. We got another run, and it wasn't off a test of the 50-day, but if I see a successful test of the 50-day, believe you me, I will be looking at Chewy very hard. It's a model that's been working. It's not pandemic proof, but certainly pandemic approved, if you will. Stock's trading up about 0.5% right now in pre-market. The fact that you've got an upgrade on the stock this morning as well is going to help it. watch it to break above that 55. 55 is going to be that test that you want to say, okay, I want to get 2 days behind me on that 55 before it's time to go long. And then finally, GameStop up 12%, upgraded from outperform to market, or to outperform from market perform at, I mentioned them before, TAG, Telsey Advisory Group, Dana Telsey. They're great when it comes to the retail sector. That's all they really cover. Upgraded from buy to hold at Jefferies as well. A double upgrade this morning for GameStop as it tests its 20-day on Friday. Horrible poop. I mean, just crappy results for the company. And the outlook was bad as well. This was well deserved. This move to $6, which is what I said. This is a $6, a move down to $6. Now, clearly, you're going to get a move that's going to move it up to $8 again. I made fun of myself for throwing out those game consoles last week, and obviously, it doesn't matter. People are still going to GameStop and buying their new Xboxes when they come out, new PlayStations, et cetera, et cetera. We're not fully oversold on the stock, and the volume hasn't been heavy for the last couple of days. I want to see some heavy volume in the 20-day hold on this stock, but this is going to be one that's going to be trading back up at $8 again. $8 again. So, and that is against, if you follow me enough, you know that I was looking at this and saying, hey, this is a stock that I kind of want to avoid here, $6. It's got to feel itself out for a way, but now you got the analysts coming in, folks. And that's what how trades change, or how quickly they can change when you start getting some big analysts like that coming in. Just an update on fuel cell. Fuel cell, actually, this is not the updated chart, but we'll look at it here in a second when we pop up to the big charts. Fuel cell basically traded sideways on Friday, despite the fact that we saw some that pressure from the market, the overall market. When I look at fuel cell, let's just pull it up here, because the next section is you and I getting together and talking about charts for about 10, 15 minutes, till about 9:22 is what I've got marked on my calendar here. We closed about unchanged on fuel cell on Friday, closed around 217. I like the way that we put in that double bottom, hopefully, or that double day at the same level when the market was drafting down. Didn't test the 200-day moving average. I hate this fact that this 20 days getting ready to cross the 50, but the 50 is still giving us some upside activity. Keep an eye on fuel cell as that alternative energy stock that's going to kind of make that zigzag back higher again. 50 days moving sideways, because this has been a trading range in a wild one. 66%, 87%, 73%, 38, 40 to the downside. And now we've got a move that is more than so this downside move is now a variety of 40%. So you've got a very discernible pattern here in the fuel cell trade. I wouldn't be surprised to see this $2 level hold and get a rally that takes us back up to $3 again. All right. With that, we're going to go ahead and switch over to you. I want to talk to you, see what kind of questions you've got, see what kind of ticker symbols we're going to look at today. We're going to get a hard stop at about 9:25, so we'll do 13 minutes or so. So, thoughts on Ollie. We talked about Ollie last week. Ollie is in a spot right now where they're not getting that inventory that they were getting a couple months ago for free, or not free, but on the cheap. That's why you've seen it roll over, the 50 days rolling over, the 20 days rolled under behind it. I think Ollie has to come down here and test out that 75-day moving average before we get any responsiveness to the downside activity. Stock is reaching some oversold levels on the RSI, so we may see a bit of a dead cat bounce here, and it could happen, I think, around that 87.50, which is going to be right around here. Maybe a pop up to 95 again, and it's going to get people excited, like, this is going to happen, we're going to go back up. But 20 trading below the 50, 50 starting to roll over. This turns it into a strike point bearish if we get a couple of other things happen. Let's say we do get that dead cat bounce, stock moves up to $95, maybe even 97 or so. Hell, if it runs up to $100, it would definitely be there, because we'd be up in the 60 to 70 range on the RSI. I'd stay clear of Ollie's right now. Wait until I give you the all clear on the stock. It will run again, especially if we get another situation where you see the pandemic closing down any type of retail operations. And I like the stock long term. When you back away and look at it on a monthly view, even before the pandemic, Ollie's was knocking the cover off of the ball. They had a rough year, a rough go of it, if you will, last year. But the stock has had just a meteoric rise since it IPO'd back in 2015. And I like it as a long-term, and discounters aren't going to go away. Nikola, we're looking at Nikola now. So Nikola has come out over the weekend and very adamantly defended their business model, their deal with GM. GM's been doing the same thing. The stock's trading at $30. Nice support at $30 for Nikola. Hate the fact that you've got the 50 and the 20-day closing trading lower right now. That is an indication, and that is because you saw so much activity after. This is when they did that fundraising, when they sold a bunch of stock, came out into the market and really lit things up. And we really never recovered from that. You'd like to see that continue to move higher because it tells people it's more than a one-time event. But there were questions that were raised about Nikola right out of the gate and how much infrastructure they're going to have to build in to get things rolling, pun intended. Now you've got the 50-day and the 20-day. Nikola has got to be right now one of my least favorite in the group, just because not only the technicals working against them, but also you've got the fundamentals. When you get short sellers that are starting to put out research articles on you, it's just one of these. Tesla has been through this period, and this doesn't mean that Nikola is not going to make it. Tesla made it. You get the haters out there that say this company can't operate or this company's made up of pipe dreams. That happens all the time, and all the time companies survive through that. I'd look at Nikola possibly around this $30 as a trade up to 45, which obviously is a 50% pull if you can get that. But I think you also have to watch that 40 level because you've got the 50 and the 20-day. It's going to be a trader stock, and it's going to continue to bounce lower according to my look at the chart there. Fastly, FSLY. Fastly shares trading higher this morning. FSLY, let's pull it up. Always give my disclosure. I have a position in Fastly. Also, position in the night trader on Fastly. FSLY, let's make sure we're on the daily chart. And you're up 8% pre-market on Fastly right now. 8%. The stock is trading at 81.65 right now. So we're going to be starting our day trading right around here, which is a great spot to be. You can see the consolidation that's happened right around that $80 to $81 level. Fastly is going to overtake, give it 2 days. It'll overtake that 20 and 50 day, which is what it was trying to do here. But you had that Friday news that came out where China said, hey, we're just not going to, we'd rather shut it down than sell it. And that's where you affected Fastly on Friday. It took it down to $75. We're going to take that 20 and that 50 day out and start that move higher again. I think $100 is on the table for Fastly over the next couple of weeks here, especially if this deal starts to get rolling much faster. What about FDX? Looks good to you. You know what? We're heading into a heavy period for Federal Express, FDX, like the transports, when you look at them, I've been telling you, you want, your companies like CHRW because the trucks have really been moving, pun intended again, but you've got FedEx now, and they've had some good fundamentals here. They're also doing a little bit of a shift up in their business model where they're kind of doing franchises right now. Instead of bringing on some of their own equipment, doing a franchise model, a bit different for FedEx. I like the stock. I like it to continue to lead higher. I don't like that it is overbought right now. I'd love to see the froth come off this, and look how it continued to go higher even though the NASDAQ 100 was pulling back. Not a technology stock, so this is more of a look at the economy, if you will, but through the eyes of the transports, and transports continue going higher. It means that we're either having stuff delivered by FedEx or shipped across the country by RYWC or CHRW. So I think FedEx continues its nice trend. A little bit of a pullback would be healthy, get it out of that overbought type of territory. This is going to continue to truck higher though. Again, pun intended. Sorry, guys. So why is September the volatility month? There's a couple. That's a great question, Selena. That's a great question. It gives me an opportunity to do a little education side instead of doing my charts here. So September, when you look at it, as I mentioned, is the most bottoms placed in October. We see bottoms built or tops built in September because of that volatility. So the reason is you've got volume that goes away from the market for 3 or 4 months. That sell and may go away. Believe it or not, that's true. When you look at the volume figures, volume drops considerably during that period. That's what starts to bring in volatility. Now, when you get a quiet period where people aren't trading as much, all of a sudden people start to come back to the market. You've got index rebalances that go on. You've got fund managers, portfolio managers that are closing out the end of their quarters. You've got investors that are coming back and starting to get active. So all of a sudden, everybody wakes up again. Think of it as almost being out in the woods when the bears wake up from their hibernation, all of a sudden things can get act careful because you don't want to get eaten by a bear. Maybe if you're going fly fishing on the side of a stream, you're going to be more cautious because there are more bears walking around hungry, right? Same type of analogy here. Everybody wakes up and starts to get back to work in August. And that is because the summer's coming to an end. Vacations are over. It has an effect. Selling may go away, come back on Labor Day. So that is why you get so much more volatility typically. And it's also a little bit of a quiet period between the earnings season. September's usually got much fewer earnings announcements, so less catalyst. Companies tend to have less things happening during the summer. And then obviously you get some years where you have the presidential election that starts firing up and gets hot and heavy in September. So all of this is it's more of a fundamental driver, and it causes that thinly traded market to move around much faster. And obviously when people are coming back during September, things kind of level out a little bit in October. We find our bottom. September volatility usually creates a bottoming opportunity or event in October. You find your bottom, and then it's off to the races for the end of the year. We get the Santa Claus rally, etc. That's how it works. That's why we get that September volatility. I'm glad you asked that question because that's really, a lot of people don't ask it. They just accept it. There's a fundamental reason and a market reason behind it. Good question. Thank you very much for that. So Gilead, we're going to take a look at Gilead. Obviously, let you know about, I talked about Gilead last week a little bit. Gilead, one of those stocks that I'm kind of, if you will, put on the sidelines or have said, hey, I'm not sure I like the stock over the intermediate term because that 50 and 200-day moving average. Stock's going to trade down 2% today at the open as well. You can see that 20-day, the trader's trend line is just, it's certainly using its strength here on the stock because we're oversold on it. We were oversold last week. Stock rallied back higher to the 20-day moving average, and you're going to get a rejection. At least it looks like it right now this morning there. This is a company that just in the biotech sector, the pharma sector, is just not right now performing with everybody. It's a relative strength laggard when you look at it. And I think you need to think of it as remaining that way. You can see the death cross that occurred here, 50-day below the 20-day. If I'm holding this stock, I'm holding it for something big that can be happening, and they're not part of that COVID. They're really not part of that vaunted group. AstraZeneca, by the way, I didn't mention, big news over the weekend. AstraZeneca getting their trials going again. Stock trading up 1.2% right now, ahead of the market open on that news. So they're going to be moving forward again. But Gilead, look at it from this perspective right now. The stock is trading below that 50-day, which is trending lower, below the 200-day. This is not a good situation. If we get off of this oversold reading and we were to pop up to a 68 or a 70 even on the stock, it would start to qualify for a strike point bearish trade. So take a look at Gilead with a very cautious eye. Some people may look at it and say, well, it's got a 4.2% dividend. But you know what? As I always tell you, a higher dividend yield can be costly because of this. You lose money on the stock while you're getting the dividend, then net, you're losing money. Ask yourself what the real cost of that dividend at that point is. And a lot of time it is exactly that, losses of stock, a loss in value in stock. Well, heavy load of call expirations on 9/18 significantly impact the market this week. They will impact the market, Doug. And it all comes down to how much of those options are in the money and out of the money. That's a number that I usually go through quite a bit, especially as we approach options expiration. Typically, you will get, and I will put a couple of these numbers together for, maybe we'll talk about it at 11 o'clock with the fast profit people. But you will typically get a lot of pinning of the strikes on expiration week, and especially when we have a large amount of options expiring as we do this month. And what that means is you'll find that there are some companies that have a lot of options out there that are getting ready to expire. And let's say I'm going to use the old ABC or XYZ company. XYZ is trading at $78, and I'm looking obviously at the chart. It is this trading at $78, and it's got its peak open interest put and call strike at the $80. There's like a 95% chance you're going to see the stock close within pennies of that $80 level on Friday when you have that type of a setup. So something you want to watch and it does free up the market the Monday following expiration. So if you've got overhead calls that could be holding us back because of a delta hedge, all of a sudden those go away and bam, you've got a market that can start to move up higher. I'm going to move back over to the chat for the last couple of minutes here. I did see Apple and Tesla, and I have to hit those because Apple, obviously, we've got a AAPL, guys, not APPL. We've got a product day coming up for the company, and everybody's going to be watching that closely, trading at the 50-day moving average. I say Apple's going to hold that 50-day moving average at 110, and we're going to see a stock that's going to rally back up towards that 125, break above the trader's trend line. You've got a stock that has moved off that overbought reading that occurred right around that the split of the stock, the share split. Everybody got whipped up into a frenzy about that. Couldn't believe that the stock was going to be such a bargain down at 125. Suckers. But at the same time, you know what? That's how behavioral investing goes. Run it up. We're off that overbought reading, testing the 50-day. Love the 50-day if it gets strong for the stock. Even if we go back before the pullback in the pandemic, and we're back in 2019 right now, you know, the 50-day was always in that pattern. 20-day was really taking charge on that. We did break below the 20-day here now. So take a look at the stock to move back up above the 20-day. And if we do, it's probably going to be a shot back up to that 135, 140. Tesla, a little bit different story here. Tesla's had a little more damage done. Stock's down, bounced off the 50-day, but we got rejected at the 20-day last week on Thursday and then followed through on Friday. We closed at about the same level. You need to see a close above that 20-day. Full disclosure, and I told you guys this, I own shares. I bought at 440, I bought at 400, bought at 325, or it was slightly higher than 325. So you want to see a close above that 20-day. That 20-day is still moving high. This is a great picture. RSI is right in the middle. 20 days moving higher, 50 days moving higher. We got a quick 30% sell off. Love the potential there with Tesla. I can't say. Okay, I'm going to look at a couple of questions. Yeah, ZB, you know what? Oracle is not a done deal yet. I think, and let's look at Oracle right now. I think you're going to see a little bit of a bumping around for the stock here over the next couple of days. Remember, the 15th was the deadline. I think you're going to see an extension of that deadline now. I think that's probably how Trump is going to play this out. He's going to say now that there is a deal, and he was saying he needed to see a finished deal before that. Obviously, they're not going to put this deal together in 2 days or, you know, today and tomorrow. It's not going to get done that quickly. But what you will see is some commitment to that deal. I think the stock looks good if you can get it. And right now, because of that potential for the volatility. And this is where you ask yourself, am I a long-term or a short-term buyer? Well, it's trading at $62 right now. So you're going to have to 61.39. So you're right up in here is where it's going to be. It's not taking out the highs. I'd like to buy this if I had to put in a level, and I'm just being picky here, folks. I don't want to buy something when it gets up there. I think you're going to see a 59 print as this all gets hashed out, and you may even see a 58 print. My limit would be set at $58 probably, because Oracle's not going to kill me if I don't have it. It's not been a relative strength performer. We don't know what's going to happen with them with TikTok. We know it's going to be good, but at the same time, I got to see some proof of how good it's going to be. It's not going to be bite dance good. So, and it's going to take a while for them to roll this out. So this is a trade right now, not necessarily an investment. I think that down the road, when we start to hear what they're going to do with it, it turns into more of an investment at that point. But Oracle right now, I'd look at $58 and say, hey, I'd be interested in picking up a little bit. And maybe even if it dipped down to 56 again, I'd dip in there again. But he's exactly right. You know what? We've got all kinds of things that can happen. Think of this as almost a test, you know, a phase 3 drug test the next couple of months for Oracle. They're going to have to get this thing right. And if they don't, all of a sudden, it's going to get dropped like a hot potato out there. All right, guys. Zoom, we'll do one more, and then it's the last letter of the alphabet. That makes it simple for me to use that as my sign off here. Zoom, we saw them pull back again on Friday, and we did a little bit of bounce, a little shimmy sham bounce. Ended up higher than the lows, if you will. 375 trying to put itself out there as support for the stock. Still bullish on Zoom. Remember, this was our earnings drive. We do have a position in the night trader portfolio right now. I see Zoom moving back up to that 475 level. It happens in the next 4, maybe 5 weeks or so. It could come faster than that, which I'd love because it'd take less of our time premium away from us on that option trade. Obviously, option time premium is what you got to worry about. Stock's opening right now because it's 9:30 and it's up 2.23%. So love the move here in Zoom. Want to see it take that 400 level out on some volume. And then it's going to be a trend up to the 475. So there we go, guys. I got you all the way to the market open. I hope you have a great day. Look for those levels that I mentioned on the NASDAQ 100. That is going to be your telltale of how this week's going to play out and how much further we go higher. So I'll see my night trader people at 11 o'clock. And then I will also be sending some notes out to the Strike Point people. So make sure you're signed up for that. The Stone Cold Killer is upset about something upstairs. Somebody must be knocking on the door. Hey, I hope everybody has a great day. I wish you the best trading success, and I'll see you tomorrow. Have a great day, folks. Bye-bye.